You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990. That's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And of course, we're celebrating today. We celebrate every day on Ron Siegel Radio. National Beer Can Appreciation Day. I'm not a beer drinker. I gave that up probably my second year of college. Figured I'd go over to Jack Daniels instead. It just was a little bit more efficient. National Compliment Day. Okay, little Donnie Trump ought to read this one. You got to wonder sometimes about that guy. And he's way better than Biden. And I'm not a fan of Nikki Haley. But, I don't know. I'm just throwing this out there. When my kids were in elementary school, I taught them not to call names to people. I'm just, so maybe we should just call him Little Donnie. When he grows up, we can call him Donald again. Just throw that out there. Food allowance passed in 2023. I don't want that one. National Peanut Butter Day. I like peanut butter. I'm a big fan of peanut butter. I don't know. And I'll put peanut butter on celery. Have you ever had that? I love peanut butter on celery. Peanut butter on a cracker. Having had an issue with my bariatric surgery, and it's always been great, but every once in a while, if I get out of line, peanut butter is the saving grace. Just throw that out there. Peanut butter, good stuff. Let's move on and see what the markets are doing today. The Dow Jones Industrial Average up 132 points. The S&P 500 is up 33.5. The NASDAQ is up 168. Oil up $1.38 a barrel. 75.75 is where we are right now on the oil market. What's driving the market? Netflix. Wow, blowout quarter and earnings. Stock is way up, but it got downgraded. And I just noticed that Microsoft is getting some big play right now as well. The markets are running away again. But beware, I'm not gonna give up on this one. I'm gonna share with you until that it's just the facts are the facts. Other than if you're in the government, you can't make up your own facts. The economy is not doing well, no matter what anybody wants to tell you. And I saw another issue proving it. There is a lady that I follow frequently, Danielle DiMartino Booth. And she's got a company. She used to work as an analyst, I think it was, at the Federal Reserve. But now she's the CEO and chief strategist at QI Research. It could be Chi Research. I don't know how they pronounce it. But she came out and did a report that I saw, I think yesterday or the day before, just talking a little bit about where we really are on the jobs market, where we really are on the idea of issues going through with employment. And some of the stats that are out there are a little bit disturbing. So here's a couple of them for you. Government hiring rate above 10% signals a recession. Okay, so where is the government hiring rate right now? Over 50%, 5 times recession levels. Once the government is not hiring as much anymore, which, once you get through tax season, they may not be hiring quite as many people. Those numbers are going to come out, and we're going to start actually seeing what the legitimate numbers are for employment. I think what in the report that she did, it was something like between government and government requirements, like healthcare and what the like covered California and some of the healthcare systems. 81% of hiring is being driven by the government. 81%. Now, the private sector is where the economy runs. So if the government is the only one hiring, and we already know that the government, the number of full-time jobs were way down last month. Part-time jobs made the numbers look good. People leaving the job market really helped because we got a 3.7% unemployment rate. If we put the people back in that gave up, lost hope, we'd be at a 4.1% unemployment. And I'm going to share with you that our jobs number coming out the early part of February, that's going to be the biggest, fakest report we get. January is always a fake report. January's report, if you look back historically, the largest number of modifications and adjustments come to the January report, which is delivered in February. Why? Because regardless of which party's in office, they want that report to look good because the State of the Union is coming up right shortly after that report comes out. Now, because President Biden's asleep, the report that's generally the State of the Union, which is generally delivered in February, he's not going to have it ready until March. Just that's the way it is. But the most revisions to any report is the January report. So we will see that once again, and we'll see the numbers come out looking good. And I will still hold true with what I've said before. We're not going to see a change in the from the Federal Reserve. They have their meeting the end of the month this month. We're not going to see a change on from the Federal Reserve. We'll have to watch and see what the chairman's commentary is afterwards to see how that's going to drive interest rates. And I'm going to talk to you a lot today about mortgage rates. But we're not going to see a change from the Federal Reserve stance. That's going to happen in the second quarter when we may actually see that unemployment is at 5.5%. Just my forecast from the studying that I do. Do I have a crystal ball? No. I just read a lot and follow a lot of the different signals that are coming out. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, experts project home prices will increase in 2024. Are more homeowners selling as mortgage rates come down? We'll talk about that. How your credit card payments are applied to your balances. All that and more. Reach me anytime. Off-air number 800-306-1990. 800-306-1990 or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. They don't tell us points paid, points received, or APR. They tell us the locked rates with consumers across 42% of all mortgage transactions nationwide. 30-year conforming loan, 6.686. 30-year jumbo loan, 7.21. 30-year FHA, 6.50. 30-year USDA, rural areas, generally no down payment, 6.455. And the best loan on the market for those that earned it. 30-year VA loan, 6.278. If you want our market commentary, our thoughts on the market, every morning we put out a little bit of our thoughts. rsrmarketminute.com, rsrmarketminute.com. You can get our thoughts right there. Again, rsrmarketminute.com. That's what happened yesterday. What's going on today? S&P 500 is now up 31.65. 10-year Treasury is up 1 basis point, 4.14 or 4.15. That'll be important later in our broadcast. We'll talk about it. Mortgage-backed securities are up 7 basis points, which means interest rates are down ever so slightly today. Why? That's the question that we all ask. That's why you tune into Ron Siegel Radio. The other numbers, you can actually get those on that super secret website, google.com. Stocks, mortgage bonds are both higher to start the day. Yesterday, the 2-year auction was met with average demand, which the bond market was able to get past. Later this afternoon, there's going to be at roughly $60 billion of 5-year treasuries auctions, which will have to be absorbed by the bond market and something we need to keep an eye on. Shelter remains key. Inflation is the main focal point of the Fed and will dictate when they begin cutting rates. And the largest component within the inflation reports that has been lagging behind is shelter. Looking at overall inflation, the Consumer Price Index is reporting year-over-year inflation at 3.4%, while the Personal Consumption Expenditures, PCE report, is at 2.6%. One of the biggest reasons for the discrepancy is shelter costs, which are weighted almost twice as much in the CPI report and is lagging what real data is telling us. We do anticipate this to eventually catch up, likely over the next few months, as it's anticipated that these organizations that put together this data will pull fresh figures for rents. There's another reading on inflation from Trufflation, which looks at 10 million data points as opposed to about 80,000 within the CPI and PCE. And it's showing current inflation at 1.87%. Big reason for that is they're showing rents only rising 0.89% versus the 6% readings in the other inflation reports. Friday will be a big day where we anticipate PCE, core inflation, to decline from 3.2 to 3%, which should be a good thing for the bond market. We also expect shelter to catch up further, hopefully in March and April. MBA, Mortgage Bankers Association, released their mortgage application data for last week, showing the purchases rose 8% after rising 9% in the previous week and are now down 18% year over year. Refinances fell 7% last week and are now down 8% year over year. Just remember, if you're thinking about on the refinance side, why are you refinancing? What is your purpose? RSR two-step, RSR two-step. If you are one of the people that's got a boatload of debt, credit card debt, auto debt, private student loan debt, unsecured debt, RSR two-step, take a look and see. I know you've got a low mortgage rate. Who cares if you've got a 30% rate on all your other stuff and it's blending out at 8, 9, 10%? Strategy beats rate always. Strategy beats rate always. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. So the question that we're going to pose today is, are mortgage rates going up or going down? We're going to talk about that. We got a little bit of a workshop here. Are mortgage rates going up or going down? And the answer to the question is yes. If we look at where mortgage rates have been throughout the year, we can actually see, and we've got a chart there, and let's see if I can figure out slide 8, tells us that we go from September of 2023 to today. Mortgage rates were at 7.12. Then they went down. They've gone, as of the time that we got the slides made, they were at 6.80. Now, these are all numbers from Freddie Mac. So I don't have the exact number today, but I did tell you that we're at 6.686 was yesterday's number from OBMMI. But if you're looking at the chart, you can actually see that we've gone up, and then we've gone down, and we've gone up a little bit. Mortgage rates move all the time. We actually hit midweek, and it's not on this chart, because this chart is, again, Freddie Mac, and they only report their data on Thursdays. So they're collecting their data all week. Then they report on Thursdays. We actually hit 8.03 back in October, 8.03. Are we going back up there again? I doubt it. And I'm going to tell you right now that probably one of the toughest thing anybody ever does is to try and forecast interest rates. If Jerome Powell can't figure it out, if our friends over at Chapman University can't figure it out, do you really think I'm going to be the one that's figuring this out? No, but I am studying it, and I want you to understand why we are, where we're potentially heading, and why. Because right now, 78.7% of mortgage rates are less than 5%. That is according to FHFA. 78.7% of mortgage rates are less than 5%. But what is that really telling us? Well, those folks that are less than 5%, unless there's some catalyst, they're not doing anything with their loans. Unless they need to right size, or they've got a divorce, or someone passed on, they're having kids, any of the above. they're not doing anything with that loan. They're going to keep that loan unless they've got boatloads of equity. See, we've seen over time that people with a lot of equity, they're not as concerned with what the interest rates are because they're not paying a lot on the mortgage. So they may say, you know something, if I've got a very small payment and it goes from $1,000 to $1,100, they may not care if they get the house they want, the location they want, if they're by their kids when they want to be by them. So they may not care. So the idea is we talk about a rate lock. And when we talk about being rate locked or homeowners being rate locked, there's two different things here. Rate lock, when you talk about a mortgage, is one issue. That's how long you have until you consummate the loan. But being rate locked is where homeowners are sitting there and saying, you know something, I've got a 3% mortgage, which 22.6% of the population does, or less, less than 3%. I'm not going to do anything with it. I just had a speaking engagement yesterday, and a couple of people came up to me and said, Ron, I've got, or you helped me get 2.625 interest rate. And we weren't talking about their APR. We were just talking about where they were at the time. And I said, unless there's a need or a very, very specific strategy, don't change that. Keep it exactly where you are. That's a great place to be. Why would you want to change if you don't have to? So I'm just throwing that out there for you. It might be a little bit better for you to keep that one. Now, one of them, we're going to do a reverse mortgage second for them. That's a different kind of a product. So that particular individual, that's what's right for their situation. Every individual has their own situation. I don't want you to think that just because a reverse mortgage second is the right answer for that person, it's the right answer for you. Because there's another individual that we were looking at the Home Select product that Geneva has. rsrhomeselect.com is where you can get the video on that. rsrhomeselect.com. So don't think that just because you're sitting there, you're going to have to stay there. Now, the other part of it is the concept of debts. And many, many people don't talk about their debts. They have two baskets. They've got all their debts as one basket, and they've got another basket. They think it's separate for their credit card, auto, non-secured, private student loans, all that other debt, maybe furniture. And they're 20, 25, 30% on some of that. Well, use some of your home equity and get that down, even if you're going into a home loan that's using the OBMMI number of 6.686. Not an offer to lend. That's not the APR. I'm just telling you that's what OBMMI says that people locked at yesterday. You can't do it today. But 6.686. Now think about that concept. How much money are you going to save on your overall your debt? Could be thousands. Now you put that same money toward principal every month, and your effective interest rate goes way, way down, and you pay everything off way quicker. Just remember that that's where the part of the process is. So that lock-in effect that we talk about, that people are in the 3s and 4s, we may start getting past that. Lance Lambert, founder of Resi Club, comment from him, a quote from him: we might be at peak lock-in effect. Some move-up or lifestyle sellers might be coming to terms with the fact 3 and 4% mortgage rates are not returning anytime soon. If the lock-in effect eases up further in 2024, it could help boost existing home sales from the very low levels experienced at the end of 2023. And Erica Plemons, housing analyst from Bright MLS, one of the biggest MLSs in the country, quote, homeowners who are selling aren't influenced by rates, with 90.5% of successful November sellers stating they were going to sell regardless of what rates were. Think about that. That's those people that don't have a huge amount of debt payment or interest or loan payment. They might be the ones that have a lot of equity. Top 3 reasons buyers paused their decision, reasons given for pausing their purchase. Multiple could be chosen, so it's not just one choice. That's why it doesn't come up to 100. Mortgage rates was the number one reason people were pausing, 72.1%. Inventory, 34.4%. Affordability, 17.4%. And when we come back, I'm going to talk to you about what determines mortgage rates. We're going to talk about what determines mortgage rates when we come back. Are more homeowners selling as mortgage rates come down? We'll talk about it. Experts project home prices will increase in 2024. We'll talk about that and how your credit card payments are applied to your balances. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, it could still be costing you thousands per year? The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@RonSiegelRadio.com. Licensed under NMLS 217037, Equal Housing Lender. Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime. At 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Experts project home prices will increase in 2024. Even though home prices are going up nationally, some people are still worried they might come down. In fact, a recent survey from Fannie Mae found that 24% of people think home prices will actually decline over the next 12 months. That means almost 1 out of every 4 people are dealing with that fear, and you might be too. To help ease that concern, here's what experts forecast will happen with prices this year. And if you're watching us on RonSiegelRadio.tv, any of our socials at ABC News and Talk AM 1490 video feed, you are seeing a chart of several different sources: MBA, Zillow, Fannie Mae, Freddie Mac, Home Price Expectation Survey, Goldman Sachs, National Association of Realtors, and Realtor.com. And it shows their forecast for 2024 and the average of all 8. If you look on the blue bar, if you're watching us, means on average, experts think home prices will go up a little over 2% this year, not down. Prices are not likely to depreciate in 2024 because inventory is still tight and lower mortgage rates are leading to strong buyer demand. Those two factors will keep pushing prices up as the year goes on, as Selma Hepp, chief economist at CoreLogic, explains. Quote, with mortgage rates dropping, demand for homes in early 2024 is likely to be strong and will again put pressure on prices similar to trends observed in early 2023. Most markets will continue to reach new home price highs over the course of 2024, unquote. What does this mean for you? Experts are saying home prices will go up this year, and that's good news if you think about buying a home. When you become a home owner, you want the value of your house to go up. That appreciation is what builds equity and makes home ownership such a great investment over time. Beyond that, expected home price appreciation also means if you're ready, willing, and able to buy, waiting just means it will cost more later. Bottom line, if you're worried home prices will come down, don't be. Many experts believe they'll actually go up this year. If you have questions or worries about what's happening with prices in our area, give me a call, 800-306-1990, 800-306-1990. If you want to know what's going on in your neighborhood, rsrlistana.com, rsrlistana.com. Great tool from our friends over at Altos Research, and they put out what's happening on every house that's for sale in the United States every week. You can go in there and put your zip code in, and it'll give you the information for your zip code. I know it's going to pop up with Anaheim, but change that to your zip code, rsrlistana.com. That's the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. We're going to continue our deep dive into what's going on in mortgage rates. And I want to talk to you a little bit about what determines mortgage rates. How do we come up with these rates? And it's important here that I share with you this number that I told you in the mortgage minute earlier that's going to be important. 4.1396. Can we just call that 4.14? I'm going to. So that's 4.14. So when we look at mortgage rates and what determines mortgage rates, we start off looking at the 10-year Treasury. Mortgage rates follow the 10-year Treasury fairly close. They're not exact, but they are close. So you take the current 10-year Treasury, which if you look at when we did the chart says 4.13. Today it's 4.14, so it's not a big difference. So you say that 4.13, and then you put a spread between what the mortgage rate is and what the 10-year Treasury is. Right now we're looking at 2.79 is what it was when we did that chart, which means a 6.92. So it's come down about 4 basis points. So right now I told you it was 6.686 was yesterday's number, 4.13. Let's use these because they're really, really close, and I've already got the charts made. So you take the 10-year Treasury and add the spread, and you come up with a mortgage rate of 6.92. Now, history tells us that over time, over the last 50 years, that spread is normally a 1.72 spread. When do we see the spread expand like it is today? Well, when you've got interest rates that are high and the market is forecasting them to go down, that spread will increase. Why? And I know I'm getting into the weeds here, but I want you to understand why that happens. So that happens because what's gone on is the servicers pay mortgage companies for the right to service a loan. And they expect they're going to be keeping that loan for 5.2 years. But right now, as interest rates come down, those servicers know that people are going to refinance as soon as it makes sense for them. So the servicers can't pay as much for that servicing fee. Well, if they can't pay as much for the servicing fee, that the mortgage rates have to cover it instead. So that's why we've got that 2.79 spread instead of the 1.72 spread. And according to Odetta Cushy, Deputy Chief Economist of First American, the spread is not always consistent. It actually widens during periods of economic or geopolitical uncertainty, as has been the case in today's market. So again, 2.79 is where that spread is. And you can see that the rates do move in unison over time. And if you look, what would happen if that spread was 1.72 today? Not changing that 10-year treasury, because that's going to be a consistent. 10-year treasury is what the 10-year treasury is. Market determines that. The spread is if we have less uncertainty. And you can see if we put that 1.72 on there, the rate today could be 5.85. So we don't even need anything to happen but get uncertainty out of the market, and we would get down to that 5.85. Do I think that'll happen? I don't know, but there's a lot of people saying that mortgage rates are going to go into the fives. Now, when we hear in the fives, we think 5%. 5.99 is in the fives. 5.85 is in the fives. So don't think that just because we have one number, that's the only number that is in there. Let's see what some other experts have to say. Mark Fleming, Chief Economist of First American, a primary driver of the increase in the yield over 2023 was inflation expectations. So the higher the current rate of inflation, and more importantly, the higher the expected future rates of inflation, the higher the yield on the 10-year as investors demand to be compensated for that inflation risk into the future. Inflation is the arch enemy of bonds. Goldman Sachs, December FOMC recap. That's the Federal Reserve's Open Market Committee. We now forecast 3 consecutive 25 basis point cuts in March, May, and June to reset the policy rate from a level that Powell has recently taken to describing as well into restrictive territory rather than just restrictive. I don't believe the same thing as Goldman Sachs. I don't think we're going to see a rate cut in March. Maybe May. Let's take a look. Doug Duncan, Senior Vice President, Chief Economist, Fannie Mae. We anticipate that after the past several years of extreme volatility in interest rates, the 30-year fixed-rate mortgage will continue to moderate over the course of 2024, moving toward a rate below 6% by the end of the year. We're talking about that in the fives again. So let's see what some experts have to say. Fannie Mae mortgage rate projections. They're saying by the third quarter of 2024, that's just a few months away, 6%. By the fourth quarter, 5.8%. 5.8% in the fourth quarter compared to 6.5 in 2023 Q4. So if somebody's calling you today and saying, hey, let's refinance today, maybe I'd ask them, what are we going to do then in the end of the 2024, or what is their game plan? Now remember, strategy beats rate always. Strategy beats rate always. So with that concept, what I want you to understand there is don't forget about our two-step, rsr2step.com, because you may go right now and do that restructuring of your finances. Now, there is a cost to doing a cash-out refinance. It's what they call a loan level price adjustment. What I'm sharing with you here is when you do that loan level price adjustment, when you have that for the cash out, well, if you did that right now at, let's say, 7% interest, and you consolidated all of your debt into one mortgage, and then you wait and you say, okay, in the fourth quarter, that's going to go down, hypothetically, no promises, 1.25 points. Well, you're going to save a lot of money by doing the two-step. Step one, consolidate now with that cash out refinance. Step two, which will be, you might get, actually the two-step might have 2 steps in step two. Because what may end up happening is in step two, you may actually find out that your credit scores have improved. So you get a better rate because interest rates are down, and you get a better rate because your credit scores have improved. Dean Baker, senior economist, Center for Economic Research. It also appears that mortgage rates are now falling again. They'll almost certainly not fall to pandemic lows, although we may soon see rates under 6%, which would be low by pre-Great Recession standards. Mark Fleming again, there's reason to believe that the rate lock-in effect will ease modestly this year as mortgage rates come down. And you can only imagine if they got below 6, then even more people would again be in the money and homeowners will become less anchored to that low interest rate. So the last thing I want to talk to you about on this is home price forecasts. Again, I just did that in the real-time real estate segment. But think about this. If interest rates go down, we get more people coming on the market. More people are able to afford. The affordability numbers get better. And we'll start seeing more demand, which pushes prices up. Now, the supply will go up, but there's been a lot of pent-up demand over time. So we're going to be watching all of that for you. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, how your credit card payments are applied to your balances. We'll chat about that and more. Reach me anytime off air, number 800-306-1990, 800-306-1990, 800-306-1990, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you a renter and tired of making monthly payments, paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com. Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at ronismylender.com. That's ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender. Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender. Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by rsrnodebt.com, rsrnodebt.com. Let's take a look and see what our report is today. How your credit card payments are applied to your balances. If you have multiple balances on your credit card, your monthly payment could be split up between them. This could be true even if you're used to seeing just one balance on your credit card. When do you have multiple balances? You can use your credit card for different types of transactions, purchases, balance transfers, or to get cash from an ATM. Each of these balances carry a different annual percentage rate, or APR. In addition, a portion of your balance may be under an introductory promotional APR or have the penalty APR for late payments applied. You're probably used to seeing a single balance if you only check your credit card statement for your upcoming payment amount and due date. Reading through the entire statement, however, you'll notice a breakdown of each balance and the rate that applies to it. Depending on the amount you pay, your credit card payment could apply to just one of these balances or all of them. How your credit card issuer applies your payment is based on federal law. The minimum payment can be applied at the card issuer's discretion. Most card issuers apply the minimum payment to the balance with the lowest interest rate, including any past due amount or late payment fees. Refer to your credit card agreement to learn how your minimum payment is applied. Since there's no payment applied to the highest rate balance, the balance may actually increase after finance charges are added. This makes it more expensive to pay off the balance in the long run. Making extra payments. Any payment above the minimum must be applied to the balance with the highest interest rate, then to the balance with the next highest rate, and so on in descending order. For example, let's say you have a credit card with a $60 minimum payment and the following balances: $500 cash advance at 20% APR, $250 purchase balance at 18% APR, and an $800 balance transfer at 2.99% APR. If you made a $700 payment, the $60 minimum would be applied to the $800 balance transfer, and the remaining would be applied to the highest rate balances. $500 will pay off the cash advance balance. The remaining $140 would be applied to the purchase balance. There's no special payment allocation method for balances with the same interest rate. The card issuer can treat these as a single balance or separate balances. Handling a deferred interest balance. An exception applies to balances with deferred interest. That is, when interest is delayed and charged only if you have a balance remaining at the end of the special financing period. If one of your balances has a deferred interest promotion, you're allowed to request your card issuer to apply the extra payments to the deferred interest balance. Otherwise, the normal payment allocations apply. The rules apply. In the last two billing cycles of the special financing period, extra payments must be applied to the deferred interest balance. This gives you a chance to pay off your balance and avoid paying accrued interest. Paying off multiple balances, it's in your best interest to have most of your payment go towards the highest interest rate balance. This allows you to save on interest by paying down expensive balances faster. However, you'll have to consistently pay more than the minimum to do this. If you can avoid mixing credit card balances, it's better managing your credit card and understanding how your payments will bring down your balance. Now, remember, pay your credit cards the right way. rsrccpayment.com, rsrccpayment.com. That's how you pay your credit cards the right way. And about 95% of the people that I see pay them incorrectly. What they're doing is they say, I pay them off in full, Ron, right after I get the statement. Congratulations, you're one of the people that pays them incorrectly. You're not getting any benefit for how you paid your credit card. So go take a look, rsrccpayment.com. If you don't have the ability to do a refinance and you've got a tremendous amount of unsecured debt, our friends over at Advisor First, give me a call. I'll put you in touch with them. They will help you work on those balances, maybe even negotiate a favorable transaction with your credit card companies and get you paid off in 5 years. 5 years. So might help you out quite a bit. Just throwing that out there for you. Again, that is the Your Credit Matters segment brought to you by rsrnodebt.com, rsrnodebt.com. I think we got time for another real-time real estate segment. Why you may want to seriously consider a newly built home. That is the subject of the real-time real estate segment brought to you by rsrmoney.com. Why you may want to seriously consider a newly built home. Are you putting off your plans to sell because you're worried you won't be able to find a home you like when you move? If so, it may be time to consider a newly built home and the benefits that come with one. Here's why. Near record percentage of new home inventory. Newly built homes are becoming an increasingly significant part of today's housing inventory, according to the most recent report from the National Association of Home Builders, NAHB. Quote, newly built homes available for sale accounted for 31% of total sales available for sale in November, compared to an approximate 12% historical average, unquote. That means the percentage of the total homes available to buy that are newly built is well over 2 times higher than the norm. And even more new homes are on the way. Recent data from the census shows there's been an uptick in both housing starts, where builders break ground on more new homes, and housing completions, homes where construction just wrapped up. And while some people may worry builders are building too many homes, that is not a concern. If anything, the recent increase is really good news, as Lawrence Yoon, chief economist at the National Association of Realtors, explains, quote, even more home building will be needed with the housing shortage persisting in most markets. Another 30% rise in home construction can easily be absorbed in the marketplace, unquote. How does this help you? Since the supply of existing homes for sale is still low right now, the increase of new home construction can be a game changer because it gives you more options for your search. Picture yourself in a home that's new from the ground up. New appliances, fresh paint, fewer maintenance needs, because everything is new, and so much more. Doesn't that sound nice? And there may be more within reach than you ever imagined. In addition, some builders are offering things like mortgage rate buy downs for home buyers right now. This can help offset today's affordability challenges while also getting you into your dream home. In a recent article, Patrick Duffy, senior real estate economist at U.S. News, explains, quote, builders have been using mortgage interest rate buy downs for many years as sales incentive whenever interest rates are relatively high. Today, more builders are offering rate buy downs for the entirety of the loan, allowing buyers to finance more home for the same payment amount, unquote. Just remember, the process of buying from a builder is different from buying from a home seller. So it's important to partner with a trusted real estate agent who knows the local market. They'll be your go-to source for coordinating with the builder, reviewing contracts, and more. Bottom line, if you're trying to sell so you can make a move, but you're having a hard time finding a home you like, give me a call at 800-306-1990, 800-306-1990. Remember, with new builders, they have got a very, very strong desire to maintain the home price. So the negotiations in many instances are not on price. They're on amenities and the potential of helping with a rate buy down. If you don't understand the rate buy down, we have a video on it for you, rsrbuydown.com, rsrbuydown.com. We go through and explain what a temporary buy down is, what a long-term buy down or permanent buy down is, which ones are best for you. It's all there, rsrbuydown.com. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.